Good evening to everyone, to you all. This is the beginning of a new week, of a new month. Yeah, today is the 2nd of December, and this is the first week of December. We just want to forecast the DXY, how it's likely to play. I know fundamentally, we could see that the DXY, yeah, we are yet to face chances of the rate getting cut amid December, according to Powell speech. So we're likely to cut the rate. So this implies that DXY might really weaken. So, but according to price action, that's actually the fundamental part of it. Yes, there are high chances of the rate being cut this December. Yeah, so by 25 basis points. Yeah, but according to price action, we've seen that on the daily, the DXY has been stable. You can see this massive consolidation. It has been trading within the support and resistance, and currently, as we speak, is right now is at a support. So this is the daily support on DXY. We haven't broken the daily support. Yeah, you can see, if at all we had broken the daily support like this, we'll be looking for sales, but we haven't broken the daily support. You can see the current range is a bullish it's a bullish order flow leg on the daily. You can see the breakout structure. This is the day time frame, and this is a consolidation within the range. So which means we're still bullish unless we break below this daily swing low. That's when we're gonna be turning bearish, so that we can start attacking this sell side, all these lows. You could see, yes, but we're not yet bearish, we're still bullish. And you can see the massive rejection of this candle within this daily support. A support area or a support key area is an order block without an imbalance. You can see this order block, we don't have an imbalance, so it qualifies to be a support area. So wherever you see an order block with an imbalance, that order block should be a demand. Yes. Order block with an imbalance should be a demand zone. Order block without imbalance should be a support area, support key area. So we're still actually within the daily support. So when we go to H1, you can simply see from daily, when we do time alignment, time frame alignment, it's gonna show you exactly what you really need to do. Time frame realignment, it shows you the correspondence of time frames. So from daily, if you're having a context on daily, basically you have to skip 1 hour, which is 4 hour. You come to H1 to see to plot your market structure. So on H1, we see we've already have a choke. You understand, we've already have a choke on H1. This is time frame realignment. We have a choke on H1. And H1, you see, before the choke, we had what we call an impulse shift. An impulse shift is the first opposing fair value gap that presents itself. So this is a bullish fair value gap. Remember, we are bearish here. You could see we had a bearish fair value gap here. It's evident. Yes. What happened to this bearish fair value gap? When price dropped, this we ended up forming a bullish fair value gap. As you could see, that's a sharp turn, ST, or an impulse shift, which shows that the intentions of price actually we're intending to shift from selling to buying. So this is a bullish fair value gap. You can see it's an ST. You can call it an impulse shift. It means the intentions the intention of price. Yeah, it means the intention of price, which means now it's no longer continuing to sell. We have the buy side sponsorship of price, you can see. So meaning this is ST. ST means the sharp turn. This is the first confluence. Then the second confluence will be a choke. So most of the time I normally enter from the ST, like you can see how I drew my long position. I normally place entries on the bullish ST. Then I wait for the choke. The choke is always the last thing. Most of the time I don't make entries on the choke, on the market structure shift. Yes, formed due to the displacement of price. I don't wait for it. The moment I see the sharp turn, the first opposing PDRA, which will be my bullish fair value gap, forming, I would use it to take entries. Yes, targeting the opposing side of liquidity. So this is DXY. I'm opening DXY to buy, because now you can see, yeah, it's tapping within this bullish fair value gap. I could see the order block here. So my intentions, I would want to see price actually starting to buy, just the way you say. Yes, because of this impulse shift, which is the ST, sharp turn. So that's the reason why I would buy. So DXY is likely to buy. When you go to other pairs, low gold, most of the time, you know, it loves actually following fundamentals. Most of the time, you know, it leaves, it runs away from the correlation, yeah, the way it is. Because as we knew, we've always known that when DXY buys, gold sells. But in this case, most of the time, gold is moved by the geopolitical factors. So it doesn't matter. You might find it buying when DXY is also buying. And you might wonder why. So it always happens all the time. This is the setup I have on gold. BTC, I took some buys. Yo, it had a massive liquidation of longs. So I marked this area of support. This is where I was waiting for. So I'm still in the buy. DXY, I took positions on gold, on gold and BTC. But on gold, I'm still actually at break even, because my gold was here and my stop loss is here. You could see I'm still hoping for gold, yes, to take out this level of 4,264, definitely. So this is what I see on gold and BTC, yes, when I relate it to DXY. Thank you so much. Yes, have a peaceful week, blessed week. Thank you.